Hello, everyone, and welcome to the July 7th, 2025 edition of the IndiWealth Weekly Market Update. I'm Jeremy Bryan, founder and CEO of IndiWealth. Today, we're just going to talk about what are the hot button issues for the coming week. So let's get started. First, let's start with this. This was last week, but I think it's important to discuss and review is that the jobs report came out last Thursday. And jobs are holding in. It was 147,000 jobs growth, which has been, is probably slower than average over the last couple of years. So not as robust as it's been, but we are still experiencing growth. I think the biggest thing that I took away from it, the unemployment rate did go down a little bit, but I think that was more math than anything else. I don't think there was really anything around going from 4.2 to 4.1 and all that fun stuff. But really, if you look at it, what was ironic to me was that government was half of the job growth there. And in all the discussions in the early part of the year about Doge and all the government efficiency, and we're going to lose a bunch of jobs in there, government was actually growing. Now, I didn't go through whether it was state and local or federal, but clearly government was still a net employer. While the private sector was a little bit weaker. So that's something I'm watching out for a little bit, is that the private sector, I think, had the lowest jobs in at least the last 8 months, and it could have been even further than that. So that's something we're going to pay a little attention to. Is government the only hiring one out there? That's usually not a great sign for the overall economy. 1 point does not make a trend, though, so we're not going to read too much into that right now, but it is something to pay attention to. But we still are in job growth mode. Wage growth was 3.7% year over year, which is better than current inflation. So again, that is a pretty good backdrop. It is coming down, though, so we're starting to see some decelerating wage growth as well. So I would not call this jobs report a rock star, but it was better than maybe potentially feared as a result of tariffs and all the other, job layoff announcements we've seen. The fact that we're still growing is a good thing. Turning to the carousel of tariffs and trade deals, that continues right away in the second half. Now we have discussions about August 1st being the relay of tariffs, and Secretary Bessing came on this weekend and said that there were trade deals coming. Again, this is a carousel. We're going around and round here. So we need to figure out where the solid footing is. If I'm a business owner right now, which I am a business owner, but if I'm a business owner of an S&P 500 company or a CEO of an S&P 500 company, I want a little bit more certainty from what I'm going to have my input costs be. So the more we're on this carousel, frankly, the more worried I get. So if they're taking it and saying, you know what, it's just bluster and these things get delayed, and then we announce tariff deals and trade deals, and then we're great, they can kind of look through that. But if we start on this reacceleration carousel of yes and no, maybe, it's going to be tough for them to plan their businesses and their input costs and what their pricing looks like. And that's difficult. And they don't usually try to grow and expand during those periods of time. They usually try to get a handle on their cost environment, and that could lead to a little bit of contraction. So this carousel we're on is not my favorite carousel. And I really hope we do get some solid footing in the next month or so with regard to what the trade deals and trade situations and tariffs look like. Turning quickly to earnings, the only one I'm really paying a lot of attention to this week is Delta. And it's not for Delta themselves. We don't own that stock. But I am looking at Delta for passenger air traffic numbers. I want to know how many people are flying. I want to know what their outlook is for that implication, because that has large implications for the remainder of the economy. If people are, again, our very basic philosophy is if people are spending on the things they want to spend on, that's very good for the U.S. economy. And so one of those is travel, right? Whether it's business travel and they're going places and seeing people, or whether that's personal travel. And honestly, that's probably the bigger one to me, is leisure travel. Are they going to places still? If we're seeing a dramatic contraction of that usually portends to saying there's maybe some other things going on. So I'll be looking at their numbers to see what passenger traffic looked like this last quarter, but also what their estimations are for, what are the current numbers looking like and what's their estimation for the future. So that's what's important to me for Delta. Lastly, on a personal or on a business note, if you will, I will be publishing later on today our outlook, our market update and outlook for the second half of 2025. That's a little bit more of a robust look. You'll see about, I think it's 30 minutes long. I recorded it last Thursday. Tune in this afternoon if you want to see a little bit more of a longer tailed thing about what we're going to do, what we see in the markets currently, and what our outlook and positioning look like. So tune in for that one. But again, as always, thank you very much for tuning into this, and tune in next week where we'll have our next market up or weekly market update. What we'll provide what the hot button topics for the week are then. Until then, take care and thank you.